An O'Reilly Auto Parts gift card is the perfect gift for that hard-to-buy-for person. Give the gift of convenience from O'Reilly Auto Parts.
O'Reilly Auto Parts.
It's the Larry Kudlow Show. Free market prosperity starts here. Now, here's Larry Kudlow.
Okay, everybody, I'm Larry Kudlow. This is the Larry Kudlow Show. And by the way, you can get us live stream on the internet. This whole radio broadcast, live stream on the internet, LarryKudlowShow.com. LarryKudlowShow.com. Get us all across the country, throughout the world, including the solar system, and that's covers the Milky Way as well. And during the week, please join us. Fabulous Fox Business Network. The name of the show is Kudlow, Monday through Friday, 4 to 5 p.m. every day. And if for some reason you can't get us, why, you can just text your favorite 9-year-old, and she will show you how to DVR the show. And you'll never miss a thing. All right, let's talk stocks. It's been kind of a bumpy ride. I mean, we had a big stock market rally right after the election. Then we had a bunch of days, I guess 10 or 11 straight days, where the Dow Jones fell. I think it has something to do with postponing or deferring or delaying the tax cuts, but I could be wrong. This past week, stocks are up a little bit. Yesterday was not a great day. So anyway, without further ado, let's bring in our stock market geniuses. Jack Bouroudjian, chairman of SmartX Data. Jim LaCamp, senior VP investments at Morgan Stanley. So gentlemen, I don't know. I'm trying to figure out what happened with that big consecutive daily loss, which was the worst since the mid-'70s. Things have recovered slightly. Yesterday, not a good day. The Dow's off 330-something. And bond yields are rising. 10 years, back to 460 some odd. So let's start with Jack Bouroudjian. How do you read this story? How bullish is bullish?
You know what? I'm still bullish. I think, when you take a look at what you just described, we're really only a couple of points off of the all-time highs. I mean, when you were if you were to go back and read that whole thing that you just said, somebody would think, well, we're 5 or 10 points off of our highs. We're not. We're just a smidgen off of our highs. In fact, I wouldn't be surprised if we ended up on our all-time highs by the end of the year. That's one session away. The reality is this, that the market is thin. This is the time of year when, and Jim knows this, when portfolio managers leave. We had Hanukkah and Christmas fall at the same time, which very rarely happens. So you had skeleton crews basically on every trading desk. Anybody that was trading had to trade. Let's put it that way. Now, having said that, the market is gearing up for what I think could be a very powerful January. Something that happened the other day with that big break. Somebody called me up and said, "What do you think?" I said, "Back the truck up and start buying," because that's exactly what you want to see, a bull market break.
I don't think I've ever heard you so bullish. Going back 25 or 30 years. Really? So back the truck up, Jim LaCamp. What do you think of that? I hope it's a big truck.
Well, I don't think I've heard Jack be that bullish ever before either, and I always enjoy being on with both of you. But here's the thing. A lot of the themes are sort of on pause, and that's because of what you mentioned, and that's the 10-year Treasury. Interest rates have never been cut 100 basis points by the Fed, accompanied by a 100 basis point rise in the 10-year Treasury at the same time. That's never happened. And so it's confusing to the market because a lot of the themes were dependent on falling rates. I mean, you're looking at an increase in mergers and acquisitions because rates were going to be down, an increase in the value of small cap companies that are heavily levered because rates are coming down, an increase in the housing market, a boost to the housing market because rates were coming down. The problem is rates didn't play along. And we still don't know what's going to happen to rates or why rates are doing what they're doing. Is it because inflation expectations or growth expectations or both? Or is it simply because the U.S. and everybody else on the planet is printing money like you can't believe, and we're still doing it? So there's a lot of questions that need to be answered. Now, that said, if you look at the regulatory burden under Joe Biden, and put it in presidential decrees by dollars, you're looking at $1.8 trillion versus $80 billion under the first Trump administration. If you bring that $1.8 trillion down a lot, that will help on the inflation side, that will help on the corporate profit side, and productivity is absolutely accelerating. So there are reasons to be optimistic, but leadership is hard to find in here, and so I think investors need to kind of play wait and see where the leadership's going to come from.
Are techs correcting, Jack Bouroudjian, after a phenomenal run up? Are techs correcting?
Well, I mean, look, as far as corrections go, the markets are always going to correct. But there are things that are happening underneath the surface here, Larry, that are important. And I think Jim was just touching on that. Look, we're talking about a president that's coming in whose mantra is drill, baby, drill. Imagine what happens if and for argument's sake, let's say that oil gets cut in half. Let's say we start to see $35 or $40 a barrel oil. Right? If that's the case, you see two things happen. One, you see that productivity miracle that Jim just alluded to really take off because we are the centerpiece for AI technology, and AI needs energy. And the other thing, which is the ancillary thing that nobody talks about, is how it weakens Iran and Russia. Those are the two biggest producers of oil and D2 diesel, which really runs the world. So when you start to take the bullets out of the gun, it really brings them to the negotiating table. And that is part of just the story. So, the reality is whenever markets start to pull back, no matter what they are, you've got to pay attention and start to put money to work. Now, the one thing I will say is, and Larry, and this is something that I've been saying all along, and I think that Jim was spot on, be aware of the bond vigilantes. Look, you've still got an administration in there that is printing up money and spending it like a drunken sailor. They keep talking about it every day. They're trying to do as much as they can while they're still there. And, that alone is enough to start hurting the bond market. But let's hope that doesn't last.
Well, what you're saying is that there's a Trump bump, and it's a Trump policy bump, and that was the original theme post-election. I'm all for it. I believe in it. I think he's going to get, very pro-growth reforms, energy, taxes, and so forth. By the way, supply-side tax cuts will produce more goods and services. That's going to bring the inflation rate down, along with oil and gas, which permeates practically every consumer need. Actually, almost everything is affected by the price of oil. I like that. But then you're going to bump up against, if you will, your 10-year. What happens if the 10-year goes to 5%? I mean, I think the Fed is blundering left and right, okay? Give the Fed no credit whatsoever. Jay Powell gets up there at the last press conference and says, well, gee willikers, looks like inflation is tougher than we thought. We're not going to get to our target for several more years. But he eases anyway, drops the interest rate down anyway, which is about as goofiest thing as I've ever seen. And as Jim said, 10-year bips up 100 basis points, okay? So I chalk that up to a vote of no confidence in Jay Powell. Does that interfere with the market? That's all I'm saying. I got a Trump bump on one side for stocks, but I got Jay Powell goofball on the other side for bonds.
Well, I think monetary. Go ahead.
Real quick, I think monetary policy, if done right, will trump fiscal policy, all right? And fiscal policy, if done Reagan-esque, all right, will be the leader and grow us out of any problems. And that's exactly where I feel we're at right now.
Part of the problem is that the Fed is chasing data like a cat chasing a laser pointer, and they've been about as elegant with this policy as a baby elephant. I mean, part of the problem is, look at the BLS numbers, for example. They've been wrong all year. And the government's been like, they have one too many letters in that acronym, the BLS. The L, they need to get rid of the L because they have revised that number downward all year. Now, if the Fed's chasing that data and the data's wrong, what good are they? And Janet Yellen told us when she was the Fed governor that, this money printing's not a problem. She told us when she was Treasury Secretary, this money printing's not a problem. Then on the way out the door, she turns around and looks at us all and laughs and says, oh, by the way, money printing might be a problem. And so they have no clue.
Yeah, Janet Yellen. Let's not talk about Janet Yellen. It's way too discouraging. Just wave handkerchiefs bye-bye. Let me take a quick break. All right, we'll come back. Jack Bouroudjian, SmartX Data, Jim LaCamp, Morgan Stanley. I'm Kudlow, the Trump Bump. We'll be right back.
This is the Larry Kudlow Show.
Over the last 75 years, over 10,000 chemicals have been introduced to our food supply. Yet the EU only allows 300 food additives. But at Thrive Market, we bring our members the highest quality brands and restrict more than 1,000 ingredients found at conventional grocery stores, making the switch is easy with our Healthy Swaps scanner, which finds better versions of all your favorite pantry, snacking, and home essentials without the added junk, dyes, and fillers. Plus, it's all delivered straight to your door. So if you're looking to shop at a grocery store that actually cares about your health, go to thrivemarket.com/podcast and you'll get 30% off your first order and a free gift.
Now, back to the Larry Kudlow Show.
We're talking stocks and bonds and whatever with Jack Bouroudjian, chairman of SmartX Data, and Jim LaCamp, senior VP investments at Morgan Stanley. Just want to read you, start with Jim LaCamp. Ed Yardeni, a very, very smart guy who's been a bull, and he's even more bullish. So he's looking for a 19% increase in earnings for 2025. The S&P hits 7,000 by the end of the year. It is presently 59.71. That's an increase of 17%, so most of the gain is earnings. And he cites, by the way, among other things, Trump's corporate tax rate of 15%, down from 21%. So there you have it, the Trump bump.
Well, if he's right, and Trump can get that done, then absolutely, because you do pair that with the productivity increases that we've seen. And it really all started coming out of the pandemic, and then pouring the fuel on that increase in productivity, of course, was AI. And that all of that is still going on. Businesses are not hiring back all of the employees they had pre-pandemic, and the jobs market is sort of fine, but most of those jobs went to illegal immigrants. We'll see what happens and the impact that'll have on inflation if we deport a lot of people who are taking lower wages. It'll be interesting, but I think Yardeni is right and there's two big ifs. A, if Trump can pull off his agenda and do it quickly, because that will be crucial. And B, if the bond market plays along. If the bond market doesn't play along, we're going to have to rethink where the leadership's going to come from, and the price of money is going to be extremely important, and rates are the price of money.
By the way, if people don't start coming to work, they're in trouble. Trump's going to have an edict. Federal workers, you better get to work or else you're going to lose your job. CEOs are doing the same thing. You better come to work or you're going to lose your job. I kind of like that. That's got to improve productivity right there, Jack Bouroudjian. You come to work, Jack Bouroudjian? People should go to the office, wherever it is. Go to the office. Work. You're getting paid. Work. Just thought I'd insert that. Just thought I'd put that in there.
Couldn't agree more.
Yeah. Did we lose Jack? All right.
Well, I will just throw, since he's gone, I'll throw this back on there. We have never seen outside of just on either side of a recession, these kinds of productivity increases that will go to the bottom line on businesses. That's a story that's not being told enough. But again, we have to look at these tax rates and whether they can be changed and whether interest rates are going to play along.
Yeah, I mean, and the other thing is talk about productivity and working.
We're going back to commercial. They all of a sudden, I lost them.
Yeah, you're here. We can hear you. I don't know if you can hear us, Jack Bouroudjian. But Jim LaCamp, the other thing is DEI.
Well,
I'm not going to say DEI is dead, but DEI has seen its last hurrah, okay? And people are going to be hired on the basis of merit, not on the basis of race or gender or who knows what. These are regulatory changes, cultural changes that I think are very bullish for business.
I agree. And again, the regulatory cost, if you look at Trump and then Obama, who did a lot more than Trump but a lot less than Biden, $1.8 trillion under presidential decrees on Biden. You cut that number in half even, and you're looking at a massive help on the inflation side and the animal spirits. I mean, Jamie Dimon is a Democrat, and he said that bankers are dancing in the streets because of the Trump victory, and that they're going to be able to lend money lend $1 for every dollar that they take in versus 65 cents, which is what they're doing now. So you put all these animal spirits back out there, and you are in a situation where the market could be wildly bullish. But again, rates have to play along, and inflation is like a hydra. You cut off one of the heads somewhere, and a lot of times it appears somewhere else. And until they can really get a grip on that inflation hydra, rates may not play along, and it may be a little bumpier ride than we want.
Jack Bouroudjian, people should go to work. Come to work. Trump is going to insist on it. Companies are going to insist on it. And the other thing I mentioned earlier is that DEI, which is sort of, DEI is affirmative action on steroids. The DEI era is over. It's going to be over. It's over federally. It's going to be over in terms of corporations. People come into work. People get hired on the basis of merit. Those are deregulatory issues that are going to help economic growth. They're going to help business. They're going to help profits. They're going to help stocks.
Well, you know what, Larry? Let's call it what it was: a leftist experiment that failed. Okay, right. And that's essentially how I see it, and how a lot of other people see it. And I got to tell you, Jim hit a lot of the points right on the head. Okay, there are a lot of people very bullish about what is coming down the pike. You got Bessent coming into secretary. You've got things that are happening that make everybody very, very anxious and optimistic. And this is good. These are good things to happen. Look, you don't want to be bullish and not be a little anxious. I think it's always good to be a little anxious and respect the market. But there's a time and a place to be bullish, and this is the time and place. I say it, and I've said it a few times to other people. The DEI thing and everything else. If anything else, they were prosperity killers. They hurted the growth of the country. And let's take it for what it is. This whole thing about staying home and working. My son, who's an attorney out in California right now, when they're looking for associates, they're looking for people that are pre-pandemic, because they want people that were in the office being trained, because people after that were not being trained properly.
Jack Bouroudjian, Jim LaCamp, Trump Bump, I'm Kudlow. Be right back with Money in Politics, folks. Stay with us.
If you're a maintenance supervisor for a commercial property, you've had to deal with everything from leaky faucets to flickering light bulbs. But nothing's worse than that ancient boiler that's lived in the building since the day it was built, 50 years ago. It's enough to make anyone lose their cool. That's where Grainger comes in. With industrial-grade products and dependable fast delivery, Grainger can help with any challenge, from worn-out components to everyday necessities. Call, click Grainger.com, or just stop by. Grainger, for the ones who get it done.